YouTube, welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Happy Thursday out there to you guys. It is almost the weekend. Well, for investors out there, we don't like it when the weekends come because the market's closed, but we also get a chance to rest up and catch up on some sleep and stuff. But got a video for you guys, why I'm buying more Google. But before we dive into the video, guys, want to give you guys all a shout out there for liking and subscribing to the channel. And if you're new to the channel, welcome. Please do not forget to hit that like and subscribe to the channel so you do not miss out on any future content that I'll be releasing here on the channel. So while that's out the bag, guys, let's go ahead and dive into the video. So Google, we all know who they are and what they do. Obviously, the owners of Google Chrome and YouTube, but they also have a huge ecosystem underneath their hood with Google Cloud, Google for Education. They have Google devices for business and education. They got Google phones, and a lot of people use Google Meet. And then obviously they have the Google Play Store, obviously the search engine Google, photos, ads, news. You can basically do a lot of things, as a Google subscriber or a Google user, to, like I said, answer emails, look at YouTube, go on Chrome and things of that nature. So yeah, that's Google and what they do and their ecosystem. So let's take a look at the price here. Closed out at $197.76. We got above around $200 today, and the market was like, yeah, see you later. So right now we are going up a little bit after hours. Hopefully we can recover sometime tomorrow, or I love it right now under $200, and that's the reason why I'm making this video. I got an average cost right now at $187.63. Got around 9 shares total in it right now, up 5%, $91. Like I said, I just started buying this at the end of last year, and I really like it right now on where it's priced at. It's trading at a 26 PE. S&P 500 is trading at a 27. Year to date, Google is already up 3%. The last year it was up 35%. I think outperforming the S&P 500, which are all good things to see. Morningstar's got it rated as undervalued as well. And now we're going to take a look at the reasons why Morningstar probably sees it and why I see it as well as a good time to start buying. The revenue base over the last 5 years, it went from 155 billion 5 years ago to now it's doubled to 339 billion in the last year, which is amazing to see. And then you got, over that same period of time, you got Microsoft, Amazon, and Apple both, going up 18%, 14%, and 8% respectively. But a really big key to Google's revenue growth was from their ad business, their advertising that generates a lot of cash. And what they do with that cash flow is they either return it to shareholders through via dividends, they do share buybacks, or they reinvest it in projects such as Waymo, which Google sees as a huge opportunity, in the driverless taxi industry. Operating margins have improved. They're boosting an average operating margin of 27.8%. So anything double digits from an operating margin standpoint is worth looking at. The companies would be worth looking at because that means that they are running that company pretty well. Returns back to shareholders. Companies either can do that via dividends or they can do stock buybacks. Buybacks tend to boost the share price in the short term as they reduce the supply of outstanding shares, and the buying itself from the company bids the share price higher in the market. So as you guys can see, Google has been buying back its shares since 2017, 2018. Google's been buying back shares of their company. And that also lets you know that managers and the executives at the companies are seeing value in their company as this time goes on. So this can be another sign that the company is undervalued and they see value in their company way before the market does. When buybacks normally happen for any company in the USA, it's normally a good sign and confidence that the American economy is strong and looking good to move forward. From a revenue and earnings per share estimate standpoint, all the way up to 2032, you guys can see they're expecting Google to increase revenue, looking to get all the way above that $600 billion mark, $600 billion revenue by 2030. And they're expecting their earnings per share to grow as well all the way up until 2030. So good things here for Google moving forward. From a quarterly revenue, EBIT, EBITDA, and earnings per share analyst estimates, so you guys can see starting from the left side of the screen here, from quarter four of 2024 all the way up to quarter four of 2026, we got nothing but double-digit growth from an earnings per share and revenue standpoint, and EBITDA and EBIT as well. So these are all good things here. These are the reasons why I'm going to continue to buy Google while it's trading at a low PE, a good peg forward ratio. They're doing share buybacks, revenue is increasing, earnings per share is increasing, and things of that nature. On a hindsight or future looking, they're targeting Google to go to 253.66, which I hope it does. That would be awesome. That would be a 27% clip return from where it's at now. They're looking at a 212, 214 in between price. And heck, even if it falls to 175.67, I would love it for it to do that, just because I know what Google is worth underneath the hood in comparison to what the market is telling me on a day-to-day price action. And guys, thank you for being here on the quick video on the reasons why I'm buying Google. Let me know in the comments, guys, if you guys own Google or you plan on buying it at some time this year. And once again, guys, it is your boy, the Dividend Dog, on the Investing on a 9 to 5 YouTube channel. Hit the like and subscribe button, guys, for me. That'll help the page out a lot. And I appreciate you guys as always. I'll catch you guys on the next video. I'm out.